Good morning. Welcome to the weekly live room at binary.com, starting always at 8 a.m. UK time. Thank you so much for joining us today on the 23rd of December as the year starts to come to an end. Only a few trading days left, in fact, before 2013 trading year is over and we reach, of course, 2014. So we're going to take a look at what we could expect in this last week or last few days together. But first of all, of course, this PowerPoint explaining that trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. So thank you for that short explanation of the risk disclaimer. But if you are watching, please, of course, take a look at this full disclosure statement as well. All right, thank you so much for your attention. Just in case you are new here, you can either watch this live at 8 a.m. Mondays, GMT time, or of course, register yourself with your name and email, that's all, at blog.binary.com/weekly trading room, and you will get an email when the recording is ready, and you can watch that anytime. All right, today we're going to take a look, of course, at the euro dollar, pound dollar, the dollar yen, AUD USD, and XAU USD. So let's take a look at the calendar. Today we have GDP on CAD. Otherwise, of course, the main events this week, definitely the holidays. Tomorrow already, actually on the 24th, is already holidays in Germany, Australia, and New Zealand. The 25th is in those countries, but also on top of that, France, Switzerland, Italy, Great Britain, Canada, and the US. Thursday, Switzerland, Germany, Italy, Canada, Great Britain. So you can see, of course, obviously, the Forex market is closed on the 25th, and we shouldn't expect any much movement today or tomorrow or on the 27th. That's just how the Forex market works with these big holidays. So next week, things might start to pick up slowly, but even then, we have major holidays on the 31st and the 1st. So really only the week after that could we expect slowly but surely things to go back to normal. With that said, let's take a look at our charts, though, more just to keep a feeling of the long-term perspectives, because as I said, one shouldn't expect much movement. So there are a lot of things a Forex trader can do, practice, paper trade, but real-life trading, personally, I will not be doing because of the lack of movement that is normally expected around these times. Well, let's take a look at what we in the long term can still expect, though. The euro dollar weekly chart. We've been talking about this one and showing basically that euro dollar is at a resistance spot, 138.30, a major level that needs to be cracked and broken. Then we could expect some upside continuation there on this euro dollar. Now, if we don't break that 138.30 level, which is indicated by the red vertical or horizontal lines, excuse me, then we might expect this euro dollar to move down. So we are at a crucial, basically, bounce or break spot, as we already know. And what happened last week? Well, we had engulfing bearish twins. We have two wicks at the top, and we have a bearish candle. That's the first bearish candle of 5 weeks before that, right at this resistance line and at the purple trend line. That could be a sign that we might be moving down. Of course, the bearishness, especially important right at this resistance level. Also, we have to be aware that last week's FOMC statement was, in fact, of course, tapering, a bit of tapering at least. And a bit of tapering should mean eventually dollar strength. It doesn't necessarily have to be immediately, but from a fundamental point of view, tapering, the creation of, or the money quantitative easing decreasement should be good for the dollar in general. So that euro dollar weakness here, the euro dollar bearishness ties into that as well. Now that, of course, we don't have to see any follow-up this or next week because of the holiday seasons, but that might be a first signal. Now we are still in an uptrend, though. If we put these lines like this, we're definitely still in an uptrend channel. So we're in uptrend, but we're close to resistance and responding and reacting to that level. As you can see from a daily perspective, we have moved down like this. but still definitely at the bottom of an uptrend channel. Even on the daily chart, we can even do something like this. So we got two uptrend channels, in fact, the green one and the blue one, both pointed up, right? So the classical battle again between a trend and a higher time frame resistance. Whoever wins that battle, though, will see a potential move to either side. Let's take a look which side that could be. If we break above purple and red, we could see maybe a move up to magenta. If we see a move below green, we can see a challenge dark green to challenge lighter green here, right? And then maybe a fall further down. So those are the lines in the sand, I would say, from the long-term perspective. And I think that's the only perspective to makes sense to take a look at. Next week, of course, on the 30th, we'll be taking a look at the yearly levels. It will be a special webinar in a way, because we'll take a look at what was this year's high, this year's low, open and close, and see how that can influence next year's trading. Right? So that will be an interesting webinar, but special because, of course, this type of analysis really only makes sense once a year. So still, therefore, of course, a bit more interesting than just looking at maybe daily candles, right? A whole year's of price action. Good. Let's take a look at the pound dollar now. Pound dollar basically had a very, very steep up move here. A bull flag right to the 23.6% fib, and we've broken out of that resistance already. We broke out of the blue and green resistance there and hooked back to the same lines for support, right? So it's a classical basically break, pull back, and continue so far. We're not maybe to continue as much as we wanted, but it's certainly the B and the P part definitely playing out as we speak. And the C, depending how much continuation we are going to get in the next 3 weeks. But it looks very bullish, of course, if we break above weekly resistance like that. Next major resistance is all the way at 167.50, which means there is some space to go up. So that wouldn't be surprised by that. Yeah, let me take off this fib because it's a bit annoying, the charts here. All right. So from this perspective, definitely looking like a break here, and price already well above the blue resistance line. And I'll just take off these fibs so you can see that just a bit better. Like this, you can see it better. And a good impulse right there. You can see price well above this blue line, and we can push up to, for example, this minus 272 at minimum. What I would expect is 166.46. So back to the daily chart and now the 4-hour chart, and you can see that this break pullback continuation here so far, basically above the weekly resistance, had a 38.2 fib bounce, which means that target is also at 166.40, and two targets there line up basically, and making maybe a bull flag right here. But that bull flag could extend quite long in these holiday weeks, the upcoming 2 weeks. This could definitely stay like this, and then maybe the week after the holidays finally break, for example. At the moment, though, it's definitely still looking bullish to me, and especially if we stay above these support levels right in here. Alrighty. There could be some resistance line right in here. That's something we could be aware of. If price does move up, that this could potentially stop it. This red line, these tops connected. Also, we have to be aware of the fact that if we connect the bottoms, though, that in fact this whole pattern could start to look as an expanding wedge. All right, so let's make this orange, and this could be an expanding wedge. An expanding wedge at this point in time is actually a continuation signal, a potential continuation pattern. This is A, B, C, D, and this could be E from our upside. Right? Expanding wedge is where we have higher highs and lower lows at the same time. Considering the fact that we have uptrend here, this could be a correction, and we will see the continuation from our upside. Another supporting factor here in the uptrend. Let's take a look at Aussie. Aussie in a very nice downtrend, contrary to the pound dollar, which is an uptrend, and the euro dollar, in fact, which is also in the uptrend. The difference, of course, between the euro and pound is that the euro is still right in front of resistance. The pound broke resistance, and its next resistance is up at 167, 166.50, 167.50, which is still a good amount of space to go. The Aussie, however, in a downtrend, in fact. So Aussie weakness here, and you can see price nicely below the moving averages and price right at the 38.2 fib. So that could be a resistance spot right in here. Price could still move up higher to the 50 or the 61.8. All these should be resistance spots for more downside, in my opinion. That's what I expect. Unless price will really break above the 91 level, then things might change slowly but surely. But until then, anything below 91, certainly still bearish in my view. And when looking at fibs, it should be for everyone's view. So what can we expect if we do continue down? Well, let's take a look at one time from higher, the day chart. We can expect more downside. First of all, there is a bottom right in here around 88.48. Okay. The price did poke through it a bit there at the green dot, but it didn't really close with a big thrust. So not a major break, right? Just a small dip below it. I would not consider that yet a break of that level. So I'd still consider a potential support level at 88.50. But because we did poke through it, there is of course always a chance to continue lower to 85 and maybe the 80 round number, right? That could be a lot of weakness here, because why? If we then zoom out to the weekly chart, we can see why. Big momentum down, hook back to the 50 fib, boom. That's what we can expect. Let me get rid of this fib for the moment. If we put a fib on this downside here, we can see that the currency stopped at the 50 fib after this tremendous downside, right? We had the first 3 months of this year were sideways movements. Then we had a breakout between April and August, a hook back in September, October, and November, December. This thing has been falling again and looking very bearish. And the next target here, all the way at 84, 85 levels. So that's what we can expect. So we then zoom back to the daily chart. We can see that since the 50% bounce here, this currency has been moving down in this beautiful trend channel, right? Indicated by blue. And if we then zoom back to the 4-hour chart, then we can see tops and bottoms here, and fibs all lining up for confluence, plus the top of the trend channel. So now, of course, here too, the Aussie, of course, the next 2 weeks could experience slowness. So we'll have to see how that ties in. We could have, for example, something like this the next 2 weeks, right? If price then breaks out of this downtrend channel, I would correct it a bit like that, for example, to incorporate that and put a trend line below these bottoms and wait for a break for that continuation to the downside. Right? That's something that could happen with the slow market in the next two weeks. Let's take a look at the dollar yen. Dollar yen, of course, had this tremendous upside and trend last quarter of last year, and the first 4 months or 5 months of this year. We've had a continuation the last few weeks of the dollar yen upside, and 103.70 seems to be broken, which is the daily top, and that was the confirmation that the traders were waiting for. Basically, we already had breaks of these tops. This was the last remaining top at 103.70. That level seems to be broken. We had a triangle here as a pause after this uptrend, and the breakout in line with the previous trend. So we could expect some good momentum if we put a fib on this upside. Where are the targets? Well, they were very far, 111, 120. So there could be a lot of space to the upside, a big trend to the upside, if this is indeed the break to the upside. And it sure does look so. I wouldn't say we have 100% confirmation, but there are good signals and good confirmation so far. First of all, of course, this uptrend channel was beautiful. And this break of the weekly wedge working very nicely. We did have some pause logically at that top, but we had already two breaks in fact, right here, and this is the second. Price is above that 103.70 level. So as long as it stays in this light blue uptrend channel, we can expect this dollar yen to move up. Now here, two weeks of sideways chop could happen, but if it stays, especially above 103.70 or even above 102.70, 102.50 here, let me check, 102.50, this should see upside continuation, in my opinion. Definitely, let me say it this way, this is definitely an uptrend channel. No one should have any doubts about that. That's just a fact. And the resistance could be broken. That's the only thing that still might want to be a bit more cautious with, whether that's a full break or not. We do have a daily candle above that level, but still it's a bearish one, so I'd still be maybe want to be a bit more careful. But the next break should be the confirmation of the dollar yen uptrend continuation. All right, last but not least, XAU USD. In the meantime, if you have any questions, please let me know so I can already prepare. I mean, I could right away go through those questions after this XAU USD. Gold fell upon the FOMC statement news that there would be a bit of tapering, and it actually fell to the next support level, which was at 1180. That's why it's good to know these support levels, because that's where it roughly went to 1185, to be precise. This is definitely the downtrend channel. The only problem is it's very close to support. It would need to break that support. Otherwise, the monthly support here could still give some bounce on this XAUSD. So that's something we have to be aware of. All right. So either the trend is going to break, is going to win and break this support, or the support is strong enough and price will break out of this uptrend and start moving or slash correcting to the upside. So I'll be waiting for one of the two. Otherwise, in this current moment, it doesn't make sense to trade. From a bigger perspective, though, this looks like an impulse correction to the 38.2, and this might be a continuation, but it also might be double bottom and a correction up. That at the moment doesn't seem likely, but one cannot fully exclude it. All right, and it's too early to say that it's about a double bottom, but it could turn into that. What we definitely would need is at least a lot of day candles here that couldn't break the bottom, and then a break out of the green, and preferably even above 1270, which is this top. Then double bottom might be slowly potentially confirmed. Otherwise, this is still down, correction, down, most likely. Right? Although one still always has to remain careful when price is right at a big support level of a higher time frame. Well, that wraps it up for my side on in the waiting mode on the XAU USD to see if we get a break or bounce. If we do break, by the way, we could see maybe a fall to 11.15, which is the 272 target. If we do break to the upside out of this downtrend channel, maybe we can move back to 1420, or even maybe these bottoms right in here around 1500, right? Because these bottoms here used to be support, can now become resistance, and the 50 fib too, so those could be resistance spots, right? For maybe more downside if we do break above green. Otherwise, maybe immediate downside. I don't see any questions so far, so let me show you that link one more time. First of all, got to thank you for your attention and being here. And we'll be back, of course, Monday, the 30th of December. We'll take a look at those special yearly highs, lows, open and closes, and see what kind of expectations we could have for 2014. Here's that link one more time, blog.banary.com/weekly training room, where you can register with your name and email address, and you'll get a heads up, an email heads up when the recording is ready. Alrighty. Well, with that said, I don't see any questions, so thanks again and wish you all a great week. Cheers.